Hey everyone, welcome back to the channel. Today we're talking about Exchange Income Corporation, which is a lesser known company in Canada. It's a conglomerate that has two main businesses, the aviation business and the manufacturing business. What's going on with EIC? We're here today for a quick overview. Let's get into it. So, Exchange Income Corporation, also known as EIC, is focused on the opportunities in aerospace and aviation, services and equipment, and manufacturing. It operates through two segments, aerospace aviation and manufacturing. So airplanes and specialty manufacturing. The aerospace and aviation segment provides scheduled airline and charter services and emergency medical services to communities located in Manitoba, Ontario, and Nunavut. So for those that aren't familiar, Ontario, Manitoba, Ontario, and Nunavut, think the Canadian Shield, think muskeg, think small lakes and rivers, think permafrost. It's a very difficult geography to build roads and railways. So the best way to get around this part of the world is through airplane. There's a lot of fly-in only communities in this part of the world, a lot of First Nation communities, a lot of mining, a lot of natural resources, and the most reliable way to get equipment, food, and people in and out is through airplanes. So these services are provided by Comair International. Comair is sort of a small regional airline. They do passenger and freight services. Their aircraft are up to 72 seats. They do a lot of food mail, dedicated freighter aircraft. They take, I think, around 15,000 pounds a trip. They take up to 72 seats per aircraft. So it's a regional airline, passenger and freight. Kuwait Air, this is a small airline. They do a lot of medevac services. They do charter services, passenger charters on aircraft like King Air, Beech 1900. These are 19-seater aircraft. And they have Bearskin Lake services, which is paired with a company called Perimeter. And this airline, Bearskin Lake, they operate Metroliners and Dash 8s. Metroliners are 9 and 15 seats, and the Dash 8s are 37 to 50 seats, much like Comair, passengers and freight stuff. And it also owns a company called Custom Helicopters. Now, for those that aren't familiar, Manitoba, Ontario, and Nunavut, these are very northern places that experience extreme cold in the winter. And in the shoulder months, in the fall and the spring, we have freeze up and thaw. So think northern Ontario, a lot of lakes and rivers. During winter, there's ice roads everywhere. Think ice road truckers. It's real easy to get around. There's ice roads everywhere. And in the summer, it's also easy to get around. You can get around in a small boat, no problem. But the shoulder months, in fall and spring, you have ice. The rivers and lakes are jammed with ice. How do you get around? You can't get around by car because the ice roads aren't in. You can't get around by boat because there's essentially icebergs in the waterways. So the best way to move people around this part of the world is with a helicopter. Helicopter doesn't care if the waterways are iced up. Helicopter is a great way to get around. So this is a wonderful way to move around this part of the world. They have sort of a medium-sized passenger regional airline. They have small charter airlines that do medevac services, and they have a helicopter business that can bounce around the communities in this part of the world during freeze up and thaw. They have other aviation supporting businesses. This happens to include the fuel. There's a lot of EIC owns all the fuel pumps in all of the communities that it operates in. So when the ice roads are in, EIC will order in a truck of fuel, and they will haul fuel into a First Nation community and during the winter, and they will use that fuel all year long. So it's a wonderful business to be in. Not many people are doing that. They also own Regional One, which focuses on supplying regional airline operators with various aircraft aftermarket engines and components. So the EIC has this locked down. They own the airlines, they own the fuel, and they own a aircraft parts manufacturer that can feed parts to the airlines. So as the airlines use parts and break down, they can just order their parts through their own conglomerate, through Regional One. So this is a wonderful, diversified airline business in a sort of remote part of northern Canada. Okay, the manufacturing segment provides manufactured goods and related services in various industries and geographic markets throughout North America. The manufacturing segment includes the operations of West Tower. West Tower is a cell phone tower manufacturer, installer, and maintainer. So I don't know about you, I have a cell phone. Everyone I know has a cell phone. There's a great demand for cell phone towers. West Tower manufactures, installs, and maintains cell phone towers. So if you've seen a cell phone tower somewhere in Canada, good chances are it was put up by West Tower. I happen to know that West Tower sold its EIC, sold the U.S. business of West Tower some years ago. So this is mainly Canadian cell phone towers. And it owns Stainless Fabrication. Stainless Fabrication, the bulk of their business is manufacturing liquid tanks. So if you've seen a truck with a big liquid tank on the back, there's a good chance it was made by Stainless Fabrication. So if you've seen these trucks driving down the road with a tank full of gasoline or oil or even water, there's a good chance that tank was made by Stainless Fabrication. And they have some other manufacturing businesses as well. So this is EIC. It has aviation on one hand and sort of niche manufacturing on the other hand. It's so well diversified, it's almost insane. What do these businesses have in common? You have airplanes, cell phone towers, and stainless steel. Sure. So let's see if it works. Let's look at some numbers about EIC. Has a market cap of 1.4 billion. So EIC is sort of a small mid-cap company. That's a very low market cap. But look at this, revenue of 1.1 billion. I don't know too many companies that have a yearly revenue. This is just the money in the door. Yearly revenue almost the size of its market cap. That's incredible. This is trading at a fairly low market cap relative to its revenue. There must be something going on. Let's keep reading. Dividend yield, 5.73, 5.75% dividend yield. Very generous dividend yield. That's great. Book value, 1934. It's currently trading at 39.81. So it's currently trading roughly 2 times its book value. That's acceptable. I mean, that's not a deal, but that's very acceptable. That's within the realm of normal. But here's the problem, PE ratio, 52 times earnings. Now, that's how many companies trade at a 52 times PE. Mainly the US tech companies, your Amazons, your Zooms of the world, those will trade at a ridiculous PE ratio. And here we are, EIC. That's a problem. However, EIC is an airline business that just came out of the 2020 pandemic. So this is excused. It has a high PE because it got hammered during the pandemic. So this high PE is basically excused. Operating margin, here we go. Here's the problem. 8.17%. 8% operating margin. This explains why its market cap is so close to its revenue, because it has such a slim margin. This is to be expected. The airline business is notoriously slim margin. So that excuses its low market cap. That might mean this company is trading at a deal. Well, let's jump into the earnings. So we just emerged, we're still in the 2020 pandemic. So to get a grip on the earnings, we have to look at the earnings pre-pandemic. So here we go. Let's look at Q1, the previous year. So this number here would be the 2018, the previous year from 19, 2018 earnings per share in Q1. It made 40 cents a share. Q1 of 2019, it made 40 cents a share. Okay, so Q1, earnings are flat, pre-pandemic. Let's move on. Q2 of 2018, 76 cents a share. Q2 of 2019, 78 cents a share. We're pretty flat. We're going in the right direction, but we're pretty flat. Q3 of 2018, 86 cents a share. Q3 2019, 93 cents a share. Solid improvement of earnings in Q3. That's great. Q4 of 2018, 75 cents a share. Q4 2019, 88 cents a share. That's a solid growth of earnings. So pre-pandemic, EIC was growing its earnings at nearly 15%, whatever that works out to, but around 12-15%. So we had 3 consecutive quarters of earnings growth prior to the pandemic. So what happened during the pandemic? So Q1 of 2019, we had earnings of 2019 of 40 cents a share. And remember, Q1, flat earnings. So we're expecting 40 cents a share, but no, 6 cents a share. This is Q1 of 2020. The pandemic was raging. This was the scariest part of the pandemic. Everyone was locking down. The hospitals didn't have PPE. So that the scariest part of the pandemic, EIC got hammered. It didn't lose money though. it squeaked out a profit of 6 cents a share. It basically broke even. Q2 of 2019, 78 cents a share. This is Q2 of 2020. The pandemic is raging. We're locking down. The news is real scary. And the analysts were expecting a loss of 33 cents a share, but no, EIC found a way to make money. It made 16 cents a share. That's better than a break even. That's a full-on profitable quarter. The analysts undercut EIC. EIC pulled through. Q3 of 2020. This is the summer months now. Everyone's masking up. People still aren't flying. Analysts were expecting a profit of 34 cents, but no, boom, 50 cents a share earnings. That's incredible. That's a solid profitable quarter. That's almost a pre-pandemic quarter. The prior quarter was 93 cents a share, is a little over half that. That's a solid profit. Q4 of 2020, this is the second wave. This is the fall of 2020. We're all masking up. The second wave is happening. An election in the U.S. is happening. Boom, solid profit, 52 cents a share. Analysts were expecting 31 cents a share, but no, EIC blew that away. So that is solid earnings during a pandemic. So we may have found an airline business that's investable. Let's keep reading. What's happening in the news with EIC? EIC just reported earnings. We have some commentary from the CEO. CEO Mike Pyle. He says, 2020 was a year unlike any in our history. Lockdowns, travel limitations, employees working remotely, and the economy beginning to open up, and then imposing an even tighter travel restriction during the late year second wave. 2020 had it all. Despite these challenges, EIC delivered consistently remarkable financial and operation performance. I'll say, from a financial perspective, the corporation generated significant cash flow since the onset of the pandemic to cover its maintenance capex and invest in the future through its growth capex and complete the acquisition of a window business, pay its dividend, reduce its debt, net of cash. This is amazing. An airline conglomerate business during the midst of the 2020 pandemic. It added another company to its conglomeration. It paid its dividend. It reduced its debt, all net of cash during a pandemic. That's amazing. I think we finally found an aviation business that's investable. Let's keep reading. Like all participants in the aviation industry, EIC is not immune to the negative effects of travel restrictions and reduced passenger volume across our network. That said, the design of EIC's aviation portfolio emphasizes diversity and essential service provision did insulate us from the worst impacts of the pandemic. Our stable foundation allowed us to post results that, frankly, stand in stark contrast to our domestic and international peers. I'll say that's an understatement. Think of the international airline peers. Think of the Deltas, the Uniteds, the Air Canadas, the WestJets, the Cathay Pacifics, the Ryanair, the Lufthansa. All the big airlines had to go groveling to the bond market, borrow money. They did things like sell their own aircraft and then lease them right back again just to generate cash. They've been begging for government bailouts this whole time. The big companies were doing that, and here it is, little EIC with its little diversified operation. Not only did it not have to go groveling to the bond market, it made a profit. That's incredible. I think that is very, very well done. We finally found an aviation business that's investable. You just have to pair it with specialty manufacturing, and what do you know, it's investable. Okay, let's see what the analysts have to say about EIC. Okay, so the analysts, we have 5 analysts following this stock. The low end of the analyst rating, $39.50. It's currently there. 5 analysts agree that the low end of EIC is basically its trading range. Its average target right now is 42.10. That's significant upside from where it's currently trading. Almost 6% upside. The 5 analysts estimate that the high end of the stock is 44. That might be conservative. This is a diversified airline company that didn't have to take on extra debt during the pandemic. Once the pandemic is over, sunny skies, EIC will go roaring right back to where it was prior to the pandemic. It didn't take on, it's not burdened with extra debt. The other airline companies of the world are all burdened with extra debt, and they sold their assets to lease their own planes. It was a nightmare. Little EIC here turned a profit every single quarter of the entire pandemic, and it didn't take on extra debt. EIC did a wonderful job during the pandemic. Folks, I hope you enjoyed this quick introduction to this little conglomerate, and we'll see you on the next one.